So this is called the Badge Brokers Down Payment Assistance Program. It's kind of by the name. We'll get to that a little later. But first and foremost, thanks so much for everyone for showing up and give us a few minutes of your time during your lunch break. What's interesting about our Dpa program, this was launched about a year and a half ago. It seemed crazy. We saw the market rates were absolutely different than they are today. People were scoffing and laughing like, oh my gosh, that's way too expensive, and they're going to pay those rates for that amazing program, great program, but the rates are too high. We have seen something that I'm not too happy about myself, but we've seen the market actually, I won't say creep, just ramp up to now we see the current Freddie and Fannie 30-year fixes are now in line with our Dpa program's 30-year fix. Just a little teaser, the rate hasn't changed a year and a half. It's 7.75 on a 30-year fix. Now you're seeing FHA, you're seeing conventional, you're seeing Freddie Fannies at 7.4 to 8.125. So now all of a sudden, our Dpa program looks amazing. Summary, our program is eligible for residents throughout all of California. You have some programs that are city-specific, county programs, certain AMI, certain demographics. All of California can apply for our program. It enables you to purchase a home up to $1 million with a fully forgivable second. I am not condoning, I'm not motivating or asking someone to use a maximum loan limit to get that property. Just telling you what's available. Our second mortgages will be fully forgiven after the sixth payment. So when you buy a house, you know it takes 7 months to kind of make that sixth payment. First month, you don't make a mortgage payment, you're closing. That's why interest is paid. The Dpa program also allows up to 100% of the closing costs to be covered by the seller or the home builder of choice. So that's huge because we cover 100% of the down payment. We still have closing costs, title, escrow fees, all the stuff, taxes, insurance, lender fees, banking fees, wire, all that stuff is still required to be paid by the buyer. Home builders are giving amazing closing cost concessions, and you're seeing price improvements throughout all of California. This is where working with an exceptional agent would really help out, because instead of someone giving you a price improvement and they lower the value to $20,000 the next week to kind of stoke that interest in the property, present an offer. It's a win-win. Hey, we'll give you your asking price. If you're going to drop to $20,000, give us that money regardless right now for closing cost credit. They get their house sold. You get 100% of your closing costs covered by the seller paid closing cost credit. It's allowed to go to all the recurring and non-recurring closing costs. It's an amazing opportunity. Okay, to be eligible, meet only one of the following 4 categories. First, a home buyer. In California, in America, but for here, California, if you have not owned a home or had ownership interest in home the last 3 years, you're a first home buyer. It's that simple. Now, if you're currently /retired, employment, or volunteer non-paid member of certain jobs, you're required as well. I mean, you're approved as well. The last 2 bullet points are really there, kind of your default canned Dpa programs. Won't really want to get too much into those because 95% of the people that apply are the first bullet point, and in conjunction with the second bullet point, when it comes to the income limit, if you're not a first home buyer, if you know a certain type of job, then we look at the income limit 140% of the county's AMI, or if you live in an underserved census tract. Majority of people are first home buyers. All that is moot point. All right. Any borrowed loan application that is current, retired, volunteer, non-paid employee will qualify. Please see below. So, military. So you're wondering, well, why would you put military, Greg? There's VA financing for people that are serving the armed service. Yes, there is. But I've worked with enough veterans, active duty, and /separated personnel to realize not all veterans have a crystal picturesque scenario. Some veterans might got bankruptcy, short sale, foreclosure, and they've lost a portion of their entitlement in the process. So here lies the problem. They have two choices. You can either pay back the VA administration the amount of the entitlement you've lost. Could be 20,000, could be 10, could be 200,000. Or you then get non-VA based financing like everybody else. So if you want 100% financing, but you took a big hit, this program's for you. You can get our DB program, 100% financing as a military personnel, so you can still get that 100% financing with owing that money to the VA for your loss of entitlement. If you're a first responder, police officer, firefighter, public safety, paramedic, etc., you qualify. Educator, from school teacher to the janitor at a school, you qualify. You can be a janitor to an x-ray tech to a doctor at a hospital, you qualify. You can also run your own daycare. You can be a self-employed daycare professional and qualify for our program. You don't have to be a CalPERS, CalSTRS employee here in California, a state employee to qualify for our program. Civil servant. So Air Force bases, military bases all throughout California. We have amazing Travis Air Force Base here. There is other bases kind of sporadic throughout the state. There's literally thousands of people that pass through the gates every day that are not enlisted, but they still serve our country. Those are civil servants. We have at the federal level, state level, and our local municipalities. They also serve our country, serve our cities, serve our counties, serve our state. They also apply and get these same programs that you do. Here's a quick example of a $6,000 purchase price using our DPA purchase. Traditional is on the right. $600K purchase price. Typical down payment is 3.5%. Estimate $21,000. So the scenario I wanted to show: total closing costs with paying all third-party fees. Borrow what's the lowest rate possible. So the origination, title, escrow, everything, all kit caboodles. $25,160. It's a lot of money, right? Plus a down payment, $46,000. Ouch, that's a lot. Our program, well, you look, the down payment 3.5% of $21,000 is typically 100% of the funds required. That's covered. Closing costs. So this is where it really helps to work with an exceptional real estate agent or a really good home buyer or home builder. You take our program, we cover 100% of the down payment and you have closing costs. You can then get a loan estimate from us. We do presentations. You look at the estimated cost to close, all the third-party fees, and then now you structure your contract to ask for that exact same amount of money as those would cost to close from the seller or the new home buyer. So example, if it's $25,000 to close, you ask for that as a recurring, non-recurring closing cost credit from the seller or the home builder. You will walk into that beautiful house with 100% of the down payment and closing costs covered. All you're paying for is the appraisal. I put zero. Technically, you pay for appraisal. If the property is new, probably don't need a home inspection. If the property is not new, please spend the money to do a home inspection, okay? It's not a requirement, but I highly suggest you do it. Eligible programs. It's FHA only. It's a traditional FHK, but please look at the 203K. Yeah, let it sink in. You can do our DP program, purchase a property that is not move-in ready. Use our standard 203K and have that purchase contract show up with a work bid from a licensed contractor or handyman. Have that property fixed up to the way you want it. You move in with 100% financing, zero down, and all the costs to repair the property to make the house yours, rolled into loan. It's an amazing opportunity to get a house and really find that value and maybe somewhere that someone's overlooked, because the cost to buy is expensive, and man, cost to repair is too. Everything's gone up. You roll it all into one loan, makes life a lot easier. Okay, parameters. I'll kind of glean with this pretty fast. It's 625 goes minimum credit score. It's 30-year fixed only. It's a purchase product. It's not a refinance. 3.5% down. That's why the maximum LTV is 96.5. Our DTI is 48.99. Yeah, there's some programs go to 50. We're at 48.99. I don't think that's a problem because I really don't want you to get that high in your DTI in the first place. Property types, 1 unit, 2 unit properties, manufactured housing. Pay attention to the first part, 1 and 2 units. So think about it. Your first home could be 100% financing, 0 down with our program. You can buy a 2 unit from day one. You buy it, you live in 1 unit, you rent the other unit out. Congratulations. Now you are a homeowner and investor at the exact same time. That other unit can help pay for your mortgage. Talking about lowering the cost of living and starting off your home journey in the right path. Please take advantage of this program. Okay, that is it. 2 minutes early. Contact us. Please go to the website. Anyone on that website, we love to have the opportunity to help you, assist you. My name is Greg Ritchie, but please reach out to anyone on our Contact Us page or website. Everyone there is very knowledgeable, professional. They would love to assist you with your DPA programs. We have so much more. We are 1 lender out of 8 in the whole state of California to have an amazing portfolio product. Please take advantage of it. If you are not a first-time home buyer and you're looking to buy in that $1 million to $5 million purchase range, and you're having a heart attack about paying 8%, I would too. We have products that are still in the 6s. So you can get 6% plus rate with us. If that's the route you're going, give someone a call. They'll love to talk to you about our programs. Hope all's well. Have a wonderful day.